Well, good morning everybody. Welcome to another webinar. Give me a yes if you can all hear me nice, loud and clearly, and you should also be looking at the Forex Factory calendar in front of you. How was everybody's weekend? Was it good? Did anybody do a great deal? I spent it working. Spent 15 hours on Saturday, 8 hours on Sunday, working on the new backtesting spreadsheet. That was not fun. And I hit a problem which has delayed it. So that was my weekend. Yep. You can all hear me, see me. Excellent stuff. So Forex Factory calendar is in front of you. There's no real news events out today that I would be paying attention to be honest with you. We do have some Aussie news out this evening at 10:30. Aussie news and New Zealand news after 10 o'clock. During the Asia session, the market's going to be thin, so if you are in a position there, particularly a small position, then I would get up to monitor that trade. But apart from that, no real news events today that would stop me from trading. So the purpose of this room is to simply review opportunities that meet the rules outlined in the educational material at freeforex.education.co.uk, and we are in a couple of trades. Is anybody still in the Euro Aussie trade that we got in yesterday? I came 2 pips from hitting for 114 pips. Now I don't actually have my account, my live account on here, so I can't show it, but came 2 pips from hitting. Did anybody take that trade? My target is down here just a few pips above the close of the candles. You can't even see it here on the 240, that's how close it is. 60, we came like 2 pips from a target. But we hold the trade. Move to break even now. Ashraf, you're still in it. Excellent stuff. I didn't hit. I got 112 pips up. I woke up this morning and we had this, let's just drop down to the 15. We had this news event, this spike that happened and literally just spiked all the way back up. But look at what we did. This is a really good sign. If you look at structure, move lower, pull back, move lower, pull back. This spike didn't, we got rejected off the outside return, and now we're just consolidating. So the important thing to remember with this is just the fact that we have to leave it. We are still in trend, those of you that took it, so you're aware what the trade is. On the 240 we've had this lower close, and then this morning we've had this 10 o'clock candle that's just closed, and we've closed for around about 50-50. So I am still expecting price to come down and hit us for target ones. But apart from that, is anybody looking at any trades? Anybody in any trades? I should also mention the pound yen as well. We're doing well on that. I'm up about 80 pips on that one, but that's a massive trade obviously. We've got about 260 pips to go before that thing hits target. So, but we're up. It's a start. That's the thing. If nobody's got any trades on the radar, I've pulled off a few opportunities. A few of them have been blown out the water now. Just let me load up some of the charts that have been hidden because of OBS. There we go. Yeah, I do have a few opportunities on the radar, so let me know if you got anything. Also, this room isn't just to discuss my trading opportunities. It is also to go over any questions you have, any structure related trading, any backtesting related trading, position sizing, anything like that. So as we're going through these opportunities, simply just type in the chat. I'll do my best to answer them. Just bear in mind YouTube Live does have a delay of around 15 seconds, so it may take me a little bit of time to respond to you. So right, Aussie dollar trend continuation, that's now been invalidated. Euro yen, we had, I think this has been invalidated as well. Let's bring over the euro yen and take a look at this. Right, what interested me on the euro yen is if we do our higher time frame analysis, and I was speaking to somebody in the chat yesterday, I've forgotten the name, curse of short-term memory. We've got a swing in the market, we've got a directional move, and we've got a pullback, and we had the market that failed to retest the closes of the candles. And I was just saying, morning Bosa, but Bosa, did you manage to get registered all right in the end into the chat system? I think you sent an email, didn't you? It was coming up with an error. We actually found out what the error was. Might be your name was the characters were too long, or it had something obscure in the field. We fixed that error now, and if you haven't registered, you should be able to. What we're saying in the chat is that I like to form a bias on every currency pair, even if I have no confirmation of that bias. But what the bias does is it tells me that I have a higher probability of going bullish or bearish. And the only thing I could take away from this was the fact that we hadn't retested the lows, and typically when we come this low down, we do retest the lows. And we'd come all the way back up to retest the very highs. So this showed buying pressure because we failed to retest the lows, and we'd already come up to the very highs. And I said there is the potential here that we could violate these highs. Now there's still the potential of doing that, but without confirmation, we're basically in consolidation in this pair. So nothing here I'm really looking at. Yeah, both. Well, if you try it, you should be able to register now without any issues. If we drop down to the 240, what I was paying attention to was this. So we had a swing in the market, a directional move, and then if we duplicate the trend line, have it on the closes of the candles, duplicate it, move it down, we had 1, 2, 3. This was the fourth test just here, and I was paying attention to these tweezer bottoms. Tweezer bottoms is just a candlestick formation. It's a little bit like 3-bar reversal or higher high, higher close. It's just an indication at this point that there's more buying pressure than selling pressure, because you look at the size of the wicks. We've got long wicks to the downside and small bodies. But what we did, we waited for confirmation. I spoke about this morning, and it was something that we want to keep an eye on. And what we've done now is we've had the 4-hour candle close, and we've closed right down here. So this is no longer an opportunity I'm looking for. If we'd actually put in a higher high, higher close, and we'd held within this channel, well then that might be something I would look for, like a retest and a chance to get long for maybe a retest of these highs. But it's just gone 10 o'clock and that's been blown out the water. Let's go and take a look at the 60 though. Could have a cipher pattern here. For those of you that did not get the message, this week we have ceased trading advanced patterns. I did put it out on an email for everybody that's registered on the system, and also on YouTube. So if you didn't get the message, you're getting it now. We stopped trading bat ciphers and Gartleys. I actually stopped trading them about 9 months ago, but I brought them back when we launched the website because it was part of the educational material. And having advanced patterns is a great tool to use for entry techniques into higher time frame moves. By themselves, they can go through phases of big drawdowns and win streaks. They're actually the lowest probability strategy I have, and so the last couple of weeks we've been hit by quite hard, about 150 pips we've been hit quite hard as a result of trading them, and there was just no need to have them on board, so we've got rid of them. Won't be trading those for the foreseeable future unless we get additional confirmation. And the cipher pattern, what I'll be looking for additional confirmation will be, first of all, it does complete at the 786, but I will be highlighting the wicks down at the X leg, and I'll be looking for rotation patterns. So if we come down and we put in a double bottom or a head and shoulders or a 3-point move and a pullback and get an entry signal here, I'll be looking at entering based on conventional targets, playing for a 382. Now this is on the 60 or 240, so there would be plenty of room for pips here, 50-60 pips, if we were to come down to the X leg. Now for anybody new that's just joined us and are moving a little bit too fast, everything I'm talking about here we go over in the educational material at Free Forex Education, and you can find the website link in the description on this on YouTube. Anybody got anything then on the euro yen? I really don't have a great deal, to be honest. I think it's going to be a quiet day. I did have a few things this morning. There was a nice breakout in the pound Aussie, but wasn't able to get involved. Let's take a look at the 15 on the euro yen. Euro yen swing in the market, directional move higher, pullback, retesting these lows at the moment. RSI oversold with divergence, valid double bottom. However, it's only valid if we come into decent or major structure. And if you look here, guys, nothing. You do have this, nothing, it violated. So what we're looking for is, we're looking for structure to be held. We're looking for multiple tests of a structure area. The bigger the reaction and the more times it's been tested and structure has been held, the higher the probability. And this is nothing, absolutely nothing here. So things like this, guys, you want to stay away from. These are not valid trading opportunities. So let's get rid of the euro yen if there's no questions on that. I'm going to have to scrub out a few of these trade ideas that I had because they have, as I say, been blown out the water. Oh, good, Bosa, so you managed to register. Excellent. Okay, so let's leave the euro New Zealand for now. Let's take a look at... We will take a look at... I'm going to do these out of order, guys. I'm just looking to see if there's anything at market. Right, let's go and take a look at the dollar Swiss. Something a little bit different. The dollar Swiss, this actually runs in quite nicely to what we've just looked at. Curse the short-term memory, euro yen. Sorry guys, I've had a very long weekend. As I say, I worked 15 hours Saturday and 7 or 8 Sunday, and I've been working since quite early this morning on the backtesting sheet. The dollar Swiss runs quite nicely into what we've just talked about on the euro yen, and that is that we can use advanced patterns. Just so happens that we've got a cipher pattern here to get involved with trades. We've almost hit targets on this one though. You can see the 382 would be the target. Now, last week we had a nice winner on this, which was the triangle, and it looks as though I've still got the workings out on here. This was the triangle, guys, just here. I got involved down here and we rallied up and hit targets. And what we can do is we can use these higher time frame patterns as confirmation, and from that point we've just rallied on up. Now what I've actually been waiting for is we've actually had a nice move higher, a pullback, a move higher, and I'm looking for a pullback into this zone. Now currently we're doing this. So what we're now going to have to wait for, it doesn't look as though we're going to get an opportunity, but we're going to wait for a new high, another pullback into our outside return, and as long as we don't hit that 382, going to be looking to get involved. And look how directional the movement is, guys. So this would be a nice trend continuation opportunity using the 240 cipher pattern, but it's not looking like we're going to get an entry before we go and hit that 382. But I'll keep an eye on it. If you guys can keep an eye on it as well, and if we do get that pullback, well, throw it in the chat so everybody can take a look at it, and we may be able to throw that out as a trading signal if we do get the entry. Any questions, guys, on the dollar Swissy? Let's get rid of that. Let's go and take a look at the euro dollar. There was a potential head and shoulders. Nothing really to write home about, but it's a potential. While this is loading, anybody got anything for the euro dollar, guys? We obviously had that nice 100 pip winner yesterday. Played out beautifully. That is not the euro dollar. That's the euro New Zealand. Didn't think that looked right. Euro dollar. Let's go and take a look at the dailies. We'll do our higher time frame analysis. Did anybody take the euro dollar? This was sent out as a trade signal last week, and we hit yesterday on this. No, nothing on euro dollar. I have a potential, but it's very weak. We've spoken about this for quite a few weeks now, the euro dollar. I spoke about, we had this consolidation area just here, which we broke out of. I also said, if I put a structure level on here, that we had this triple retest. And since we broke out, we not only violated this level of structure, but we pulled back. We pulled back for a 2618, which is right here, the 618. By itself, I don't trade 2618 trades. But then what we did is we had a pullback and we've made a new high. And we also talk about that I would expect price to come up to this structure level. Now, other than that, I have no bias on this currency pair now. We could, as we are doing now, see the pullback and see another continuation, maybe up to the start of this pole. The problem is that this channel, while this is a valid channel, the channel itself has now been violated. And in order for me to predict that price is going to be higher, the channel itself would have to be some sort of pattern. So we could say that if it was valid, price came down to here and this was a descending channel, and at that point we could then say that we could come up to retest this level. But this is not a descending channel, it is just a channel, so I have no bias on this currency pair now guys. So as I drop down the time frames, we'll take a look at the 240. Structure level on where we're trading at the moment. I'll put it on at the closes of the candles and also at the wicks. We have just put in a higher close on the 240, but we did not go oversold on the 240, and we can look left for some form of structure. We do have a little bit just where we're at the moment within the wicks. That was valid here. We did have quite a bit further left, I think. Yeah, this is what interested me here. And I will keep going because there is some more, and just there as well. So we are actually at an area that's seen a reaction in the past. Do we have any fib confluence? We can throw in a fib from our swing low to swing high, and we haven't as yet come down into a 61.8, and we have no fib confluence, guys. So not a great deal, even though it's come into a structure level that's been tested multiple times. What I was looking at was the fact that we have a swing in the market. You can make the case that we have an AB equals CD pattern just here. It's a bit weak if you ask me. The reason for that is this move up here, we don't have any defining swing. So you can see here on this leg we've got a lovely point, we've got a defining swing. Up here we don't, and for these AB equals CD patterns I do like a defining swing. But what we did was we came down to this level and we came down to this point and we've held structure. Now if we actually go to the 15, you can make the case for a head and shoulders. Again guys, though, it's weak. I think really this is something that we want to stay away from. It's just not high quality. These are just opportunities. So we had the move lower, pull back, a move lower, a move higher. So we actually, with this point, violated this level. You could look for a pullback and a chance to get long, potentially up to this area. You have already had a higher high, higher close, but again guys, not a great deal. Really don't have a great deal on the radar. Latch, welcome Latch. Latch, do you have anything on the euro dollar? We have a low quality opportunity, potential head and shoulders. Not a great deal. I'm going to move that to the side, and if you do, just chuck it in the chat and I'll go back and take a look, but not a great deal. The best opportunities, guys, we're already in. We're about 90 pips up now on the pound yen. You long a bat. Okay, let's go and take a look for the bat pattern. We stopped working advanced patterns, Latch. We've this week I've removed them from the signal service, so no bats, no ciphers, no Gartleys. They're the lowest probability strategy that we actually have, and in the last 2 weeks they've cost us 150 pips, but so they've been removed for the foreseeable future. So bat pattern, I see what you're looking at. You're looking at probably the 60. You're looking at something like this, aren't you? X to A to B, B to C, CD completion was at the 886. You could even take the X leg from here if you take it from this point, and you can highlight the wicks. You can then look for a rotation pattern within this zone. That may actually play in hand with the potential head and shoulders that we have if we want extra confluence. And again guys, just let me have a drink of water, guys. Apologies guys, again if you just joined. I've had a very long weekend, didn't sleep a great deal, and yeah, this would play into this potential bat pattern. The potential, and again when I say potential, it's low quality AB equals CD pattern and the potential head and shoulders. Not the highest quality trade in my opinion. Now if however we were to do something like this, so we've had the move lower, the pullback, the move lower, the violation, this zone here has violated the structure zone, the pullback, and we make another high, well we're now in trend on the 15, and you could look for targets based on the bat pattern, and that would be the 382 for me. And we've spoken about this a lot of times, where I don't like to use just one strategy. I like to use multiple strategies, implement them all together, and make that trading opportunity a higher probability trade. So that's an opportunity. The bat for me personally isn't valid. The X leg I like to be more defined, but if it is valid for you, then that's how you can potentially get involved with the trade. So that's the euro dollar. The only thing I think I've got on the radar would be the pound dollar. Let me just scrub out the euro dollar. Yeah, the pound dollar we've spoken about for quite a while, and still have the workings out here, but I'm going to delete it all off. And for a long time we spoke about, well, let's take it from the top. This has been going on now a good few weeks. First of all, we have X to A to B, B to C, CD completion for the butterfly. Then we have X to A to B, B to C, CD completion was for the bat pattern. And again, use these advanced patterns as additional confirmation. this is a daily pattern, and we can wait for the market to turn, provide confirmation that we're going to go higher, and then get involved with the trade. Now we have a lot of confluence on this opportunity. If we throw a fib on from our swing high to our swing low, we have not come up to hit those targets, but we've got 80% of the way, and that to me is an indication that the market is starting to turn. And we can also make the case for a head and shoulders. So we had a move lower, a pullback, a move lower, a move higher, and now we're seeing a pullback. And if we highlight the wicks, what we didn't do was violate this area. So what I like to do with potential head and shoulders is highlight the left shoulder and look for conservative entries. That means dropping down a time frame and looking for that entry. Now, as you can see, we're just starting to enter this zone right here. Now, before we get onto that, let's have a look at why the market turned up at this point, because last week or the week before we were talking about this valid double top right here. And I actually put this in as a trade idea, and I said, guys, this is a valid double top right now. And what I really liked about this setup was that we had a swing in the market, a directional move, a pullback, a move higher, the double top. Now the reason I didn't enter this double top was because we had the big daily bat pattern and cipher pattern, butterfly pattern, apologies, and I wanted extra confirmation that this double top was going to be a valid double top, a confirmed double top, and we do that by waiting for the market to violate the V point of the double top, and then we can look for a 2618. And I actually sent out about 3 signals last week where we put a limit order on at the 618. So just let me throw the fib on from our swing high to swing low. And I said that I would be now looking at aggressively selling the 618 right here. And we came up, we failed to get filled. I sent the signal out 2 or 3 times because we were up and down, and I don't like to leave limit orders on for a long time. If we're close to entries, that's fine. If not, I like to have those limit orders removed so we don't have the exposure. You never know if there's going to be a big news event that comes out. If Trump decides to go to war, something like that, it's happened in the past. So I don't like to keep limit orders on. But what happened then is we did this. We retested this zone and we moved higher. So for me, this was a lower probability trade, but we did actually come up and we almost hit the 618. So if you got involved in this, you would have front run. I would front run for 3 or 4 pips, so I would have just been filled, but I didn't. And what we see now is we've now seen this head and shoulders play out. So we saw the move lower, the pullback, and now we've had the move lower. So I'm no longer looking at getting involved in this head and shoulders, and there's 2 reasons for that. One is this is our price reversal zone where we're looking at buying up the market, and 2, the targets for the head and shoulders would only be an AB equals CD pattern. And as you can see, we have just come down and would have hit those targets. So the head and shoulders played out lovely. If you got involved with that, well done. You banked some decent profits on that. But can everybody see the reasons why I held off and waited for confirmation on that trade? And if you took it, well done, because it was a valid opportunity. It was just that we had 2 big advanced patterns that were 1 time frame higher. They were on the dailies, and this opportunity was on the 240. And when we have that kind of situation, I want to be a little bit cautious, particularly since we were 80% of the way towards those pattern targets. So guys, I'm now going to be looking for an entry down here, and it's going to have to be a rotation pattern. So I'm going to be looking for double bottoms and head and shoulders. there would be a lot of risk associated with this trade. So if we can get something like a double bottom down in this level, we can get tight stops. We will be looking at either initial targets playing for a retest of the highs, or you could actually just play for a complete retest of that 382 all the way up to this level. And there's an awful lot of pips up for grabs, around 250 pips up for grabs in this move. So want to be cautious on a trade this size, but that's what I'm going to be looking at. Let's go and take a look at the 60. Has anybody got anything on the 60? RSI just gone over, what are we at there, 16, oversold at 16. Psychological number, if we put a structure level on, right here at the 12600, coming into the structure level, might be an area where we can look for that double bottom or even head and shoulders, guys. Just give me a yes if you guys can still hear me. You guys are very quiet today. It might be my monotone voice. Apologies, guys. There's not a great deal of enthusiasm in my voice this morning. Okay, let's go and take a look at the 15. Who took the pound yen trade, by the way? Who's in it? Euro Aussie coming back down. We'll hit. Definitively will hit. We've got to be positive. Yep. Is a yes because you're all in it. Curse this 15-second delay. So, pound dollar, guys, nothing. Let's go and take a look at the 5. We'll take a look at the 5 range as well, see if there's anything on there. Five-minute, nothing. 5 range. Bosa, I wish I was. If you didn't have the problem logging in Bosa, you might have been. We did discuss it in the chat and it was sent out as a signal. Hey, it's not hit yet though. It's a valid opportunity. It's a big pattern. It will actually be, I think it will be, if it hits, my highest winning trade based on the number of pips. You guys that have followed me for a long time, Marcus will remember, we spoke about this just a few days ago, the dollar CAD flag pattern, very, very similar to the pound yen. That one I think was something like 276 pips of profit, and I got 270 pips up, and I recorded that trade through all the stages because I thought if this thing goes on and hits, it'll be a great educational video. And I made the video in the end was 20 minutes long, and I did a really good job of talking about structure and the breakout and all the confluence that we had, and then became 7 pips from hitting, and it just never hit, and it stopped me out for break even. So if the pound hits, it'll be the biggest trade I've ever had, 260 pips, something like that. Let's hope it comes off. I tell you what though, guys, it is incredibly difficult to hold trades of that size. And again, guys, if you've got anything you want me to look at in terms of the trades, just let me know, and I'll go and take a look at them. But the markets are pretty dead. But I've been speaking to a few people in the chat, direct messages, and just within the chat as well. And you know, people find it very difficult to hold trades that are, say, over the 60-minute time frame, because if you enter in a trade that's on the 60-minute or even the 240, you have to be prepared to be in that trade for the long haul. Because typically, if we go and take a look at the 240, let's just remove this off. You know, when we get moves like this on the 4-hour, it's great, because you can actually see progress being made. You can see directional movement, you can see profit going up. You can see lovely big red candles and small bullish candles. But the majority of time, guys, the market does this, it does this, it does this, it does this. But notice what the market does. From that consolidation area, we broke out. From this consolidation area, we broke out. From this consolidation area, we broke out. From this consolidation area, we broke out. So I fully understand why it is incredibly difficult to hold higher time frame trades compared to lower time frame trades. Heck, it's a lot easier for me. I much prefer to be in a 15-minute trade and be out of it that same day than hold the thing over the weekend. The euro dollar, I had to hold that over the weekend. I think I was in it for maybe 4 or 5 days. But if you enter in on those higher time frame trades, you have to be prepared to hold them, because otherwise, if you don't, you're just going to end up sabotaging your trade. Ashraf was going to say it's similar to the dollar CAD. Mikkel, why not trail stops at structure? Is that for the pound yen you're talking about? If it is, the reason why I don't trail stops is I do that, Mikkel, but I don't if it's a breakout pattern, because I've tested breakout patterns and I don't actually have. Let me bring over the pound yen and just show you what I mean. But that's a really good question. Why don't I? And I do have a very good answer for it. And this will be down to your own rules, but I'll tell you why I don't. Now, I don't have this connected to my live account, so I can't show you what we're up. But the way breakout patterns work is that we have a directional pole, and then we have the market that consolidates. And this is what I call a standard flag pattern, and we have the market that adheres to the channel like this. Now, when I did my testing for this pattern, it had around a 60 to 70% probability of hitting the 127 fib. Now, that was regardless of whether there was structure looking left, regardless if there was a psychological number. It had a very high probability of going down to hit that 127. Now, the good thing about breakout patterns is they are called breakout patterns for a reason, and we typically break out with force. So we typically see something like this, and we typically enter trend. Now, if at this stage you want to move your stop above the outside return, you can do. But we don't always do this. Sometimes we just do this. Straight down and hit targets. Sometimes we break out the channel and then we see a pullback either to this trend line. Let me zoom in a little bit. So either to the trend line just here, or we can actually see a pullback up to this point. So up to retest the highs. And in the educational material, I talk about how very often these breakout patterns can come back up for a retest or a double top. And we see that before the breakout. So what happens is, if you get the breakout and then you decide to make to break even, move to break even, and then we get the pullback, you're stopped out of a winning trade that has anywhere between a 60 and 70% win rate. On top of that, my risk is usually this much, my reward is usually that much. So if I have a 2 or 3 to 1 risk to reward, and I have a 60 to 70% chance of that trade going on to hit, I don't want to risk being stopped out by moving to break even just on the off chance that I'll be stopped out, because in the long run that's going to cost me more. So but to answer your question, Mikkel, yeah, it's a very good question that you asked. That's when I did the back testing on these patterns, I found it was far more profitable to do that. So yeah, I do not move to break even. I leave it to hit. So any other questions on that? Martin, would you consider showing us some of your backtesting results from the spreadsheets so that we can see the thought process behind it? You can go onto the website, Martin, and take a look at the only ones I've got which are visible. Where's my sheet? Is this one. Why can't I bring that over? Oh, there we go. So if you go onto the website, click on latest trades. Since the website was started, you can just put in whatever filters you want. So just go and click on, for instance, this week from the 1st, we've had 2 trades. We've had the winning cipher for 100 and the Euro Aussie that lost for 17. In terms of my actual backtesting results, there's no way that I would be able to upload those to the system for you to be able to see them. So that's why I've created this. So I think we've got around 2 months worth of data on here now, but as time progresses, you can just go ahead and take a look at these. So if you go and take a look at Head and Shoulders, let me reset that and go ahead and take a look at, say, Head and Shoulders. And then you'll see that Head and Shoulders did very well. And then we're hitting a bit of a drawdown. It tells you the total number of trades and total number of pips. So that would be the forward testing results. Okay, what have I done with my chat? Ashraf, in what scenarios you would trail stops? For breakout patterns, I wouldn't, not unless... well, there are a few situations when I would trail stops, but none which I'll just go over here. It would make this too complicated. I'd trail stops on breakouts. So if we had a breakout like this, so we had an area, I can actually bring over some charts and do this. Let's find an area of consolidation that have been tested multiple times. Okay, we'll take this one. So we'll say that this area here has been tested 1, 2, 3, 4 times. We were putting in lower highs. And the market was indicating that we were going to violate this level, and I knew that our next structure level was down here. Then what you can do is you can drop to your lower time frames. So you wait for the breakout, drop to your lower time frames, and then be aggressive with your entry. And then as the market is moving down, if this is your stop loss, you simply keep moving your stop loss down on every outside return until your targets are hit. So you can trail stops that way. It's not very often a trail stops, to be honest with you, because for me, if we'd violated this level of structure, there was a high probability that we were going to come down to this level. And so it's not very often that I would trail stops. I would just leave it to either hit targets or be stopped out. And trailing your stop loss is good when the market is moving directionally. But again, we've just gone over there many scenarios where the market is in consolidation, and if you were to implement that strategy there, you would be stopped out very quickly and you could end up sabotaging the trade. So you may only bank a few pips, whereas there could have been maybe 50, 60 or 100 pips up for grabs. So trailing stops works best when we're in trend. So not within this situation. It works best when we violate a major level of structure, because the more times a structure level has been tested, the higher the probability the breakout is going to break out with force. And with force comes directional movement. With directional movement comes trend, and that's when you can be more aggressive. So that's how I work trailing stops. Again, there are other people that work it differently. They like to get involved with a trade and move to break even straight away, which is fine. Again, there's no right or wrong way of doing it. It's just that if I'm getting involved in a trend continuation trade, it's going to have a lot of confluence and it's going to be a high probability trade. And just like the breakout pattern, I don't want to move to break even when it's a high probability trade and have a higher chance of being stopped out. So Mikkel, when getting large for a large win, yeah. If we come close to targets, I will move to break even. On a breakout pattern, typically if we come within a couple of pips or 10 pips, I'll move to break even. If we're coming, for instance, in this example here, if we were down at this level, so we were just a few pips away from targets, I'd move to break even. If we did something like this, like we came down and we put in a double bottom, but there was another structure level just above this one, just here, and we had the RSI confirmation, then I would move to break even, because there was a potential that we could, rotate at this level. So just use your judgment, really. I will only move to break even if we're close to targets, or if the market is giving us strong confirmation that we're failing to go lower and we could be reversing. Because at the end of the day, what we don't want to happen is for us to be right with the move, but we just fail to reach our destination by a few pips. So the pound yen's moving quite nicely, aren't we? We're continuing the move lower. Let's go and take a look at the 240. Any other questions on the trailing stop, guys, or moving to break even? What you can do with this pattern, and this is what we're involved with, guys, we had a swing in the market, we had a directional move, we draw this out based on the closes of the candles, we duplicate it looking for a minimum of 4 touches, 1, 2, 3, 4. We need some fib confluence, minimum of a 382. We came into a 618, but we also rallied and tested the 786, and we had a long test candle just here, an indication there was selling pressure. This also came in to multiple structure levels looking left. Nothing major in terms of that structure level, and then that was followed by a lovely lower close rejection candle. Now, if you're not involved in this, there are still things you can do to get involved with the trade. Those of you that have done the educational material and the back testing for this will know what they are, but can anybody tell me what we can wait for on this big pattern? Latch, looks like you're getting the reaction on your back pattern. Well done. I guess that means that the head and shoulders was valid. Can anybody tell me on this big pattern where we have a high probability of breaking out of the channel here and rallying down to targets at that 127 fib, what we can wait for to get involved with this trading opportunity? Could we wait for the breakout of the channel? Latch says double top. Yeah, the market could retrace all the way back to here. We've just spoken about how many times these big patterns come back up for a retest. Second one we can do is we can wait for the breakout of the channel. We can wait for a pullback to this trend line and then look for a rotation pattern. Double top, head and shoulders, even look for a 3-point move, putting us in trend. We could even look for the market to come a little higher, maybe to, I don't know, this level here, where we have some structure looking left. And again, look for an entry reason. And I talk about this quite a lot. On these big patterns, just because you don't get your optimum entry doesn't mean you can't get involved with the trade. Again, this is a breakout pattern. If we break out, we typically enter trend on the lower time frames. So watch for the breakout, the pullback, the move lower, the pullback. Here's your trend entry, chance to get short, and there's nearly 100 pips up for grabs. So just because you missed the entry doesn't mean you've missed the trade. Let's go and take a look at the 60. I mean, I'm not interested in anything on this currency pair now because I'm already short. It does look as though you can make the case here for a cipher pattern. No, we hit the 618. Could make the case here for a cipher if you're looking to get long X to A to B, B to C, CD completion at the 786. Take a quick look at the 15. I don't know if anybody spotted this, but we had a swing in the market, a directional move. Valid wedge. Don't know if anybody spotted this. I didn't mention it in the chat, but it is valid because, as per the rules in the educational material, we need one side to not test the closes of the candles, and this was the valid side. And what we did is we coiled, and this is a breakout pattern, guys, and just like I've just said on the bigger pattern on the pound yen, these break out with force, and they're great to get involved with on the lower time frame for trend continuation. Now this has already hit targets. I've not checked the lower time frame. Let's see if there was anything to get involved with. Let's check out the 5, see if there was an opportunity to get involved with that trend trade. Nothing on the 5. There could be on the 5 range from the look of it. Let's go and take a look at the 5 range. If you don't know what the 5 range is, guys, it's just a different way of looking at the markets. The candle gets produced every 5 pips instead of every 5 minutes, for instance. So it's not time based. Right, it doesn't look as though it offered you an opportunity, but look what we did. We had a move lower, a pullback, a move lower, a pullback, and a move lower. So we entered trend, but in this instance, it didn't give you an opportunity to get involved. But can you guys see how this breakout pattern works exactly the same with the 240? In actual fact, you have a higher probability of getting involved in the 240 because it's such a big breakout pattern that we're not just going to rally all the way to targets. It's too big for that. We're going to see relief. Yeah, we might get, let me just throw this back on. We might get some decent rallies down to this point, but because it's the 240, the market will get overextended and we will see some relief. So on the bigger time frames, we do tend to see this, and there is a higher probability of this trade offering opportunity to get involved with. Any questions on that, guys? Again, all this is in the educational material. I cover all of this and how to really optimize these breakout patterns, because it doesn't matter if you miss it. Doesn't matter if you miss it. If it's big enough, it will still, majority of the time, offer opportunities to get involved. That Euro Aussie still not hit for 115. God. Right, let's take a look at, we were looking at the Euro Yen, weren't we? I'm just keeping an eye on potential double bottom. Nope. Okay. Let's go and take a look at the dollar CAD, guys, and we'll start wrapping this up. There really isn't a great deal in the markets, I'm afraid, unless you guys have got any specific questions. I think we'll call the dollar CAD the last one. Still looking for that big AB equals CD pattern. It's still valid for me, and there is still an opportunity here. AB equals CD pattern, and can you see the difference in the AB equals CD pattern on the Euro Yen? I think it was the Euro Yen. The swing in the market, the clearly defined A to B, B to C leg, and I was looking at the very lows here within the wicks. Well, we've come down to that area now, and yesterday we put in a nice higher high, higher close candle, which is an indication that we could be going higher. Morning, Patrick. But by itself, a higher high, higher close candle just isn't good enough for me to get involved with an AB equals CD pattern. So you guys throw in some trade ideas as to how we can potentially get involved in this very big daily AB equals CD pattern. Because we've had some confirmation, guys. We've got a pattern. We've had structure hold. We have not violated that structure. We've had the higher high, higher close candle. What other confirmation can we look for that the market could be going higher? Maybe down in this level just here. We can check out the RSI maybe. That went oversold just under 20. Double bottom, yep. Let's go and take a look at the 240. Could look for a double bottom. Now, I was hoping for a double bottom, but if we check out the RSI, on this first test here, we do not have the RSI confirmation. So there will be no valid double bottom on the 240, guys. Head and shoulders is a possibility. For me, the only head and shoulders here is this one. That would be the left shoulder. This would be the head. And this would be a deep retracement. Something like that. Now, the targets for the AB equals CD pattern is the 382. And if I throw that 382 on there, well, you can see that if we come up to this point here, we're very close to targets, and we may just have targets hit. If we need a violation of that level before we see the pullback, well, targets would be hit. So if this does end up being a head shoulders, it's unlikely that's going to provide us an entry reason. And down here, we just head and shoulders is a pattern, and so we're looking for swings in the market, and just down here it isn't producing that. What I do like about this is that if we look at the trend, we draw out the trend on the 240, we have just had a violation. So we had a move lower, a pullback, a move lower, a pullback, and I don't know if you guys can quite see that, but this candle here is a confirmed violation of this outside return. So this is called an initial structure high. It is an indication that we've got a potential rotation going on. So AB equals CD pattern on the dailies. We do have the higher high, higher close on the daily. We have the RSI confirmation on the daily. Here on the 240, we've got an initial structure high where we've violated structure. One thing I did forget to do was fibs. We can look for an inversion. We've already gone past a 1618, an extension, we've got a 1414, so there's no fib confluence. Okay, so it's not providing us our head and shoulders or our double bottom. What other entry reasons can we use to get involved with the trade? Considering that we have had some confirmation here with this initial structure high. Trend is one. Flag, yeah, well done, Marcus. I'll come to the flag in a minute because I know you was looking at that on the 60. We could look for a pullback, another move higher, another pullback, and then we've entered trend. Now we can get involved with the trade, and just like I said all the way through this webinar, these higher time frame patterns, doesn't matter if you don't get your optimum entry, you wait. Because one thing that people kind of skip over, and I did for a long time actually, was I've got to get my best entry, I've got to get the optimum entry, and you can sometimes end up taking a lower probability trade. Now, this trade has some confirmation that we're going to go higher, but my rules are I can only get involved with a double bottom or head and shoulders. And if that doesn't happen, then the next thing I can do is I can wait for another entry reason like a flag, or I can wait for us to enter trend. And what a lot of people forget is that if this AB equals CD pattern is valid, the market is going to go up. It is going to go up, and with it going up, it is very likely going to provide signals and entry reasons. So, and I know that seems very, it can stare you in the face. Well, that's obviously true, that if we're going to go up, we're going to go up. But if you then wait and say, well, hang on a minute, this trade isn't as high probability as I would like, it doesn't meet the rules, so let's wait. Because if it's going to go higher, it's going to go higher, and it's going to very likely do something like this where we enter trend. Or if we don't enter trend, we can drop down to the 60, and it can provide something like breakout patterns. And here is a flag pattern. Now, Marcus spotted this morning, and he was very right. He waited for confirmation as per the rules, and the rules are right here that we need to see a green candle, and he waited for his confirmation. He didn't get it, and so he saved himself a losing trade. And that's exactly the same that we're doing with this big AB equals CD pattern. We're waiting for confirmation. So that's a good thing about having multiple strategies, guys. Just you can implement them when they meet the rules. And for this one, we're simply going to be waiting and see if the market gives us more confirmation. And if we do enter trend up here, well, there's still 80 pips up for grabs. And I'd much prefer to wait for a higher probability trade and bank 80 pips than enter right now and potentially risk something like 100 pips for a lower probability trade. So guys, that is the dollar CAD. Any questions on the dollar CAD? Any opportunities you guys are looking at? Apart from that, I really don't have anything else that's even worth going over. I had something on the pound CAD, but we already had the breakout. No? Okay, guys. Well, apologies for being a little bit tired this morning and not too enthusiastic. As I say, it's been a very long weekend. I'm going to have a bit of a break today since the markets are a bit slow. So I will be in the chat, but I'll be taking a bit of a rest this afternoon. But as usual, if you've got any questions, send me a DM, throw it in the chat. There's plenty of people in there with experience to deal with structure, and you've got all the educational material. Apart from that, have a great day trading, and I will see you on the next webinar.